When are we going to have a recession? Thanks for joining me in the crypto simulation. Be sure to join my free Telegram, The Snake Pit. Everybody wants to know when one's coming. I'm going to tell you my thoughts. This is part 2 of Wen Recession. Be sure to check out my first video for an overview of what I said last time. So, anything I tell you here, not financial advice, including the recession predictions. This is for educational and entertainment purposes only. So, we're looking at the chart of the S&P 500 on a roughly 150-year time frame. And what you'll notice is it's been in a massive bull market this entire time. You have your accumulation phase, your little shakeout here. Little. It was a freaking Great Depression. Another little shakeout, higher low. World War II. And then you just took off into this crazy raging bull market, and we had some, minor corrections, just a .com bust and, a Great Recession, nothing to worry about. And of course, we had the series of recessions in the 70s. The 2022 one barely even registers as anything. We're stacked above our 10-year, 20-year, 40-year, 50-year, and 100-year SMAs. That is freaking incredible. And it has been this way, folks, all the way since 1948. That's when we finally got nicely stacked and went into a raging bull market. So just looking at this chart, it looks like a Great Recession. And when I mean great, I mean something this size or that size. It doesn't look like it's coming. It just doesn't. Looks like we're in just one bull run after another. So let's take a look at some of the technicals have to say for us on these are 1-year candles, keep in mind. So on a 1-year candle basis, let's take a look. So the first thing I want to look at is the average sentiment oscillator. When this is moving up in green, that is generally very bullish. And when it's moving down, that's more bearish. And you can see that the highest this has ever gone was about 87.94. And that happened to coincide with the top of the .com boom. And then we had a .com recession, a very little bounce out of that. But this is mostly a sideways decade in here. And you can see that this also happened kind of very choppy behavior heading into the 70s. And that was a rough time. And bottoming out in 82. And then finally, we were able to get, interest rates up high enough to kind of solve Nixon's problem and the problems before that with those recessions. We also had the Great Depression right here, and then also, post World War II baby boom bull market. So you can see that. And then in here, we had the post World War I recession. And before that, we had a nice boom. So these boom and busts have been around for a while. And even though the magnitude of the boom has been much greater, you can see that we generally don't spend more than a decade kind of trailing down. Now, what's interesting is that we did have this little pullback in January of 2022 coming out of COVID, and then we actually have bullish divergence ever since then. This is bullish divergence. Now, how high will this go? Who knows? Is this going to come down? Or are we going to head into a recession? That's the million-dollar question. No way to tell just looking at this chart. But still, it gives you an interesting perspective that you wouldn't otherwise be able to see. Looking at the ADX and DI, we see something similar happening. We actually see some bullish divergence here. And this ADX is starting to pick up some steam. It's around 53.9 in terms of strength. And if we were to just take a look at where that has happened before, you can see not too many times where we've had this strong of an uptrend. So the last time we were heading into a trend this strong was in January of 1959, and it wasn't really until January of 65 or 66 that the ADX started to fade. Now, that doesn't mean that the bull market was still just going on indefinitely. Of course, we could see here that we were kind of fading in strength, but this was, maximum trend strength. And then another time we hit this trend strength was in January of 92, and we know what followed that was a freaking crazy bull market, like the most manic bull market ever. And here we are crossing it yet again. So history tells us that when we cross this, we're going to have some pretty strong movements in the market, and they can actually last for several years. And so this should make you kind of wonder. The slope of this looks like it could go either way, right? But it looks like we're about to cross this line, and head into some pretty crazy times one way or the other. Now, if you look at the green directional index, we have to pay attention to both, right? Back here, the green directional index was mostly in an uptrend and then started to trend down towards the red. And these little spikes, these were periods of economic boom, and then the bust would be the valleys. And when you're down in this region, that's when things are really bad. So this was, I think, around the Nixon recession. We had like a series of recessions during then, and then you can even see this happen in the Great Financial Crisis where we touched there. And this happened post World War I. And believe it or not, the Great Depression, actually, we never crossed, but we came close to crossing coming out of it. So, again, you can't just tell off of one metric exactly what's going on. But we did see a nice bounce out of the 2008 Great Recession, and we got a high here in January of 2021, and then a trip down, and now we have bullish divergence again, and we really have no way of knowing how strong this is going to be. Is this going to end up kinking to the upside? I kind of doubt it. I'm thinking we probably are going to, head back down into a period of economic weakness. The question is exactly when. My TA methods are very unconventional, so whatever you get from me is going to be something you won't hear anywhere else. So this is the beam, and this is sort of like a silly chart to pull up, really, but I just wanted to look at it and see. This is basically, if you were in a bull market, this would tell you when to sell. Okay, and it's basically saying that, here, this was a great time to accumulate. Just if you happen to be around, post gold rush and post Civil War during that time, then, hey, you're accumulating. And then we would accumulate like right up to here. This is a nice accumulation range. Oh, we have a little leg up. Oop, just a fake out. And then we only really got into like what we would consider profit taking territory in the 60s. We had a series of, spikes. And then we fell down and just went absolutely crazy. And this almost looks like what happened with Bonk back in December. If you remember that meme coin, it actually went above this red line. It's insane bull market. I mean, this is just absolutely insane. This is off the charts now, literally. So there's that to say, whoa, we're in some pretty strong times right now. I mean, you can see that even during the great financial crisis, we just barely tapped this orange line, which kind of served as resistance back in the 60s, and it's acting as support right now. So we bounced off of it. When you zoom out like this, you get a different perspective on things that you normally wouldn't get. So it looks like we're kind of trying to test the highs from the .com boom. And we kind of already did in January 2021, but are we going to try to do it again? So interesting, right? The bulls have been in charge since 1951. Now, that is a freaking long time. The bulls have been in charge since 1951. Look at all these green volume bars. Even some of the worst financial times, we just saw the green disappear for a year, and that was it. We are at full green again. Full green in 2024. We were at full green back here in the 1920s. I guess history's rhyming. The only time we ever went red where the bears were in control was during the Great Depression. That's it. That is the only time that's happened. It took us a long, long time to crawl out of that giant bear market, if you want to call it that. It does look like a little brief bear market on a yearly scale. It was actually like a long time. We're talking like over a decade of misery down here. But wow, look at how strong the United States economy has been and how strong it still is. Even with all that you hear going on in the background, this is telling me we're in times of strength. Now, does it look to you like we might be putting in, let me not put a horizontal line, let's do a trend line, that we might be putting in like a series of lower highs since the early 90s? I mean, it's possible. And if you don't want to draw the trend line like that, you could just draw the trend line this way. Are we about to have another high and head down into a recession? Might this recession not be that bad? As bad as everybody's fearing it's going to be? That's a good question. You can see that in January 2022, we did come down. The green bar came down about halfway, but we just bounced right out. So is this like a dead cat bounce? I mean, you do have to kind of look at things like this, because if this does curl over and it looks like it might be in the process of cresting, that would suggest that a recession is coming. Okay, and it doesn't have to be a bad one. It could be a small little kink. We could see the green bar just go down slightly, but it doesn't have to be the worst recession in our lives. I mean, look at how these moving averages are stacked. I mean, they are stacked just one right on top of the other. So it would take a while to get things rolling in a really, really bad way. I mean, we're flying right above the 10-year SMA at the moment. Okay, now this is insane. We have not had a short signal on the Gaussian filter MACD or the hyperspace rails really since the great financial crisis. Look at this insane rise. Truly insane. But you can see the green is starting to cross over, and you can imagine, and we see when this tends to, it takes a lot of momentum. This is a yearly chart to move the green like this. You can almost see there might be some trouble coming up ahead. Of course, this is a yearly thing, so is it going to happen this year or is it going to happen next year? I don't know, but I would say within the next year or two, we're getting a recession. I mean, look how freaking high this thing is. When this thing crosses over, that's when you start to have trouble. This is where the .com bust came in, and you can see that this long trip down was basically a sideways decade. So, we could see something kind of like that play out. This needs to cool off. Look at this. Look at this crazy crap. We've had the last short signal before that was in January 75. Short signal before that was 1940. So, I mean, these are pretty spaced out. Long signal in, it looks like January 2011. So these things don't print often. I mean, the previous long signal was in January of 77. So when the recessions hit, they don't tend to last a very long time. And you can see over time, these kind of extreme signals, I'm not talking minor recessions, I'm talking the more major ones, they don't seem to happen nearly as often. Now, the KZX RSI on the yearly is interesting because usually when you're printing these yellow bars, this is indicating, hey, you're in oversold territory and you've got some major bearishness ahead of you. And now that could take a really long time. I mean, if you look here, we had these bars kind of, pointing to the fact that we've got some lower highs coming in. And sure enough, by the time the 70s came around, fun was over for a while. And so it looks like we're kind of in one of those periods again where we're kind of trending down. We are oversold, but, you can almost visualize, hey, this could maybe start coming down in 2025. It could start coming down at the end of this year. I can't tell you exactly when, but we are hitting those higher lows. And when one is definitely formed, you'll see another line probably shoot out here as well on the KZX RSI. There have only been 5 breaks in structure in the entire history of the S&P. You have one here, this break of structure that occurred after the late 1800s into the year 1900. And then you have another break of structure here in 1924. Another break of structure in 1938. In 1950. Another break of structure in, looks like about 1979. And then our last break of structure in January 2012. And these are the accumulation phases that you're looking at. So there's only been 1, 2, 3, 4, 5 accumulation phases before blast off to another all-time high. And so, in the periods from one accumulation phase to another, let's take a look at how long it took. Maybe I can pull up the date tool. So if we look at this accumulation phase from one to the other, from the end of one accumulation phase to start of the other, this was over 5,480 days. I need to get my calculator. Let's put that into years. I can't really see the years because it's being obstructed, but just roughly speaking, that's 15 years. So I'm not saying a 15-year accumulation phase, I'm saying 15 years from one accumulation phase to the other. And then over here, let's grab that tool again. So from here to here, roughly 4,383 days. So that would be about 12 years. 12 years from one accumulation phase to another. And then we had this break-in structure, which led to a really long bull market. And let's take a look at what that turned out to be. So this was, I think I went a little too far, right around there, 8,400 days from one accumulation phase to another, 23 years. 23 years. Yes, there were recessions along the way, but I'm talking the major ones that send you into a decade of sideways action. We know we're going to get minor recessions. They happen all the time. In a long enough time frame, you're going to get them. But I'm talking the really scary ones. And then we have, let's see, this break of structure here, all the way to this break of structure. So this was 9,864 days. Oh my gosh, 27 years. 27 years. Wow. So there's a pattern here. Let me repeat this to you. It's not a pattern worth betting on by any means. I've got 4 data points, so we know that's not really much. But we've got 15 years from one sideways period to another, then followed by 12 years to another sideways period, 23 years until another sideways period, and 27 years until another. Now, this ended in 2007, meaning that we're 17 years in. So if I were to take the average of all these, okay, and just divide by 4, that's 19.25 years on average. We're 17 years in, so if we're just talking averages here, we're entering into the window where we should expect a severe drop and a sideways decade, possibly within the next 2 years in 2026. That doesn't mean it has to happen then. I mean, for all we know, this could just keep getting longer and longer and longer, and the next one might be like, 31 years or something. I don't think so, but I'm just saying it is possible. The average length is about 19 years, but things are different. This is a different time than what we're seeing here. So, maybe we don't see a severe recession until the 2030s sometime, where we go sideways for a decade, or who knows, right? But this should be fairly encouraging to see this pattern. This shows you how strong the U.S. economy really is. The MACD is absolutely off the charts. I mean, if that's not bullish, I don't know what is. Look at this. Just look at this. We got a bullish divergence in our MACD January of 2012 and went absolutely ballistic. I mean, we just went straight up. It's insane. It is insane. This stuff should make your jaw drop. Now, look at here, 1981, boom, straight up. And you start to get worried when you start seeing this bounce around and then come down like that. So this period of bearish divergence, it's almost like it was meant to happen. This was the result of the great financial crisis. And you can see when you have these crises, these really like long drawn out crises, you get some pretty nice bull market movement. We are getting kind of toppy though. You can almost see it starting to form. And again, this happens on a yearly basis. So we might be seeing the tide start to turn, because how long can you really sustain this manic of a run? This is the relative volatility index of the S&P 500. And you can see that we have been putting in slightly higher highs and relatively two higher lows, right? So what if we were to extend this up just a little bit higher? That could take us into let's see. I should probably just get a line drawing tool to do this. Takes us into 2025. So we could start maybe a minor recession or a moderate recession sometime, maybe by the end of this year or early next year. And that's kind of been my base case. Now, I mean, I can't tell you that the spike's going to go exactly that high and it's going to follow this pattern. But if it did, then that would be a natural turning point sometime in very early 2025, possibly late this year as well, where you would see things start to turn around. Of course, if I were to just tip this just a little bit that way, then you go to 2026. Now, I like to keep it kind of nicely lined up because that's generally how the relative volatility index works. It's, but it can kink. It can kink to the right. So, you're not going to be able to guess based off this. You'd say, well, sometime between the end of this year and 2026, you would expect a recession, a fairly minor to moderate one. This is the money flow oscillator, or money flow index oscillator trendoscope. And you can see that this basically illustrates movements in the market from overbought to oversold. Let's look at the times where we were severely overbought. One of those times was in the roaring 20s. January 20, I was going to say 2028, not quite there yet, 1928. And when were we severely oversold? We were severely oversold in January of 1932, Great Depression, and once again, January 1940. And then we were overbought very strongly in 1956, 1960, 1965, the baby boom years. And then we went to being almost severely oversold in January of 1974, Nixon recession. And then we had, we're just peaking like crazy. We broke through overbought in 1987, tapped it, back tested it in 1990. 1993, we put in a local top, had a little dip, and then we just went absolutely crazy here to January of 1999. That again is the .com, and just went absolutely down straight into the great financial crisis. And we hadn't been at levels that low. If we look at it, on a timeline here, we hadn't been at levels that low. Sorry, didn't mean to draw that kind of line. Vertical, let's go for a horizontal. That's what I meant to do. Since roughly 1974, and before that 1944. So these levels, we don't tend to hit them that often. Now, is it possible that we curl over here? I mean, this does look like it's trying to curl. We were pretty much riding up the overbought line, in 2021, and we took a nice dive in 2022. And now this doesn't look very strong, does it? Is this going to come down, and are we going to go down and have another severe economic crisis? I mean, I don't know, but all I can tell you is that these were spaced out by like about 30 years, and so 30 years from now would be 2038 if we were to follow this 30-year pattern, or we get a really severe recession. So yeah, I'm not sure what's going to happen next. All I know is the stock market is very strong right now, and we're heading back towards overbought. And again, this is on a yearly time frame. And this is the TRIX bubble, one of my favorite indicators, triple exponential moving average. You have a bunch of really short-term moving averages, short, of course, being in years. And you can see when the green is at the bottom, this was right, heading straight into the great financial crisis. This was the top of the .com boom. This was the Nixon years, inflationary decade. This was World War II, Great Depression time. Down here, post World War I, roaring 20s, baby boom. Even over here, you have the very early 20th century. So boom bust, boom bust, boom bust. And you can see that we're doing our best when everything's nicely stacked. We're not stacked right now. We did come through here, and now we took a little dip down into 2024 with the TRIX. But what's going to happen next? I can tell you, it sure doesn't seem like we're going to get a severe depression, because that takes time. It takes time to build. You can see it can take a decade to build a severe depression, like a bad recession. And if you notice what's been happening with the TRIX over time, what you can see is, relatively speaking, we've been putting in higher lows. Now, we haven't yet put in a higher high, but we have done that in the past. I mean, these have been, relatively speaking, higher highs. So the question is, do we get another one, or is this it? Is this going to be an anomaly where we don't go as high? And sorry, these trend lines are messy, but you can still get the picture. Where we don't go as high as we've gone before with the TRIX. I don't know. Everybody's saying recession coming, and maybe they're right. Maybe we do dip down and kind of head back down towards this trend line again. And this will be the first time in a very, very long time, really ever, that you could argue this was a lower high. This was a lower high. So, but this would be a significantly lower high if maybe we just kind of peaked up to here and then started going down. So yeah, anything's possible. And certainly with the way that the U.S., debt is, and you just look around you at how much people are struggling, it's kind of hard to imagine that we, could take this like major leg up without having a little bit of a slowdown, but I just don't think it's going to be as severe as everybody thinks. Going back to the on-chain or on-chart data, and let me actually get rid of those moving averages. You can see that we are just in mania. We've been in mania since 1947. 1947, folks. What is that? 77 years? We've been in mania for 77 years. Relatively speaking, we have, relative to the first 30 or 40 years of the 20th century. And it ain't stopping. We're back up at the top of the logarithmic Bollinger Bands. Now we know when we get up here, when we get this overextended, we usually do get a correction. That correction can take place over many years. Here it was pretty much a 2.5 year correction. So look, I'm not saying we're not going to get a recession and it's not going to be bad, but usually, maybe you come down, have a recession, and you bounce, and then you have another one or something like that. That could happen, or we could just fly higher. Now that, like I said, look at here, when we touched the top of the logarithmic weighted Bollinger Bands, we had a very nasty correction. Here we touched it, and we just kept going. Now we went kind of like in this sort of almost sideways kind of up, but kind of not super strong up, and then we dumped. So, this is getting into the Vietnam War area, and, that did create a pretty big financial crisis and eventually led to a major recession, and we bounced, rode this for quite some time into 2000, and then we kind of bounced down and tagged the lower Bollinger Band. So we're riding this again, and we see what historically happens when you ride this. You kind of go a little bit sideways for a while. Now that doesn't have to happen. We could just come right down, but I don't know. Things look really bullish, really freaking bullish. Like last time we rode this, we did get a red candle the next year, and then another red candle, another red candle. So look, I can't predict the future, but I can say we are getting pretty overheated for sure. But the party could go on perhaps for the rest of this year and maybe even into next year for all we know. When in doubt, ride the waves. So this is the Northern Lights or 3D wave trend. Just shows the momentum of the price movements on different moving averages. This is the kernel moving average. Gives you a sense of kind of how things are moving. We've only ever printed, this deep red once, and that was back in the late 1800s. And then we just went like crazy mania all the way up to the late 1890s, and then as we entered into the 20th century, it was a slide downwards on the strength of these moves. Now, this doesn't mean we were bearish. It just means that the strength of the price movement was decreasing. And then you can see here, these peaks, right? We have a peak in 02, a peak in 07, a peak in 29. And this is where we had, kind of slipped into the more troubling times. You see these red troughs, 1934, 1942, and you can see kind of the trend strength picking up here, 1957, 65, and then we fell into the Nixon. And you can kind of see these patterns play out. Here's a .com, and then a little dead cat bounce into our great financial crisis, and now we're peaking again, and it looks like we're starting to come down. So this could be foreshadowing some economic weakness. It could be foreshadowing that we're entering into, starting at the end of this year or next year, we're entering into that decade of sideways movement, potentially, right? Potentially that ends in a really major recession, maybe 8 years from now. But it doesn't mean that, all hope is lost because we're coming down. We'll bounce up again at some point. But I think it'd be ridiculous to expect that this just goes up forever without doing a little bit of sideways chop first. Have to digest these big moves in bull markets. Even if your bull market is 20 years long, or in this case, 150-year bull market, roughly speaking, you need time to digest these large moves up. And this is what I talked about in my Bitcoin video, where I talked about the Bitcoin cycle lie. I'm going to actually link that video to the end of this one, because I want you to watch that right after you watch this, to remind you that the term cycle is arbitrary and that we should not force ourselves to look at the charts in terms of cycles. This has to be this long or that long, or you have waves. And if I remember correctly, in my last Wen Recession video, I talked about logarithmic regression on the stock market. So in this one, I wanted to just kind of zoom out. When in doubt, zoom out, and you can draw your own conclusions, right? We have printed a red dot, and a red dot means that these moving averages are starting to turn over towards the downside. When you get the green dots, that's usually the beginning of a more bullish time. We got the red dot. Actually, we got it all the way back in January of 2016, but this is an annual chart. The momentum is very slow, so it takes a long time. So you can see what I love about wave trend momentum. You see we hit maximum oversold in here, and now we're starting to lighten up. So this is telling me is that we're closer to a recession than you think. This is why I keep saying end of this year, early next year is kind of my base case. But if it went out into 2025, I would not be surprised either. If we went all the way to 2026, I would be a little surprised. That does seem like a little too long. So I'm sticking with end of this year, early next year for my own prediction. What's your prediction? What do you think? This shouldn't be an echo chamber here, and I want to hear your opinions as well. Thanks for joining me for this really fun video about Wen Recession. Recessions are not fun, but talking about charts is. So be sure to join me in my free Telegram group, The Snake Pit. We have 111 members there as of the time of this video. Let's bring in some more people, man. We have a great thing going there. I've got an alerts channel and everything, and it's all completely free. Please make sure you like, comment, and subscribe, and share this video with everyone you know. And share this video in Telegram groups, share it in Discord groups, share it in other kinds of groups, wherever you can. And let's calm people down a little bit. From my opinion, not financial advice, it doesn't seem like the coming recession is going to be as catastrophic as everybody thinks it is. But I think we will get a catastrophic recession. I just don't think it's coming this year or next year. I mean, every recession sucks. But just looking at strictly from a technical analysis point of view, I'm just not seeing it now. That doesn't mean one can't happen, okay? I want to be clear about that. Look at what happened here. It took a while. It took 2.5 years for .com to play out. We could see something like that. I think it's reasonable to expect something kind of like that, but we know history doesn't repeat exactly the same way. It does something different every time. So are we here? I don't know. I don't think so. Or are we closer to here? I guess you'll have to tell me what you think. So my base case, still the end of the year, early 2025. What do you think? I really want to know. I'll see you in the snake pit or see you in the YouTube comments. Let me know. Bye now.